Good morning, everyone. I'm very glad to present our Foresight episode 1 of season 1. In such a sharing world, more sharing would bring more value to the whole crop protection industry. As you may know, our Foresight is SPM predictive analysis about some key active ingredients. We will select more hot topics about the China agrochemical industry to analysis, and we warmly welcome your canned comments in the questions area, so that we could find out the reality in the changing market. That's our value, our goal. In my first episode, I want to raise the question, what will be China glyphosate price trend in 2023? To be honest, I'm not a medicalist, mystic master with magical powers. What I do is to have logic analysis with my experience. If we want to analyze the price trend of glyphosate, we have to understand the basic conditions of whole glyphosate market. The more comprehensive this background information we have, the better we can make decisions. At present, China's export price of glyphosate has reached $4.5 per kg. The key raw material, yellow phosphorus, has also begun to rise in price. Let's talk about the price of upstream yellow phosphorus first. Upstream yellow phosphorus capacity is reduced under the influence of long-term low demand. Once the demand is released, the rebound of yellow phosphorus price is a normal phenomenon. Here, we don't need to have too much concern. With higher yellow phosphorus price, manufacturers will surely continue to release production capacity or even make good inventories in the following months. They could wait for the concentrated release of glyphosate demand in fall if this is real in the case. For glyphosate supply, the situation is too complicated. For predictive analysis, we need to understand not only supply and demand but also decision-making behavior. Actually, anyone can do predictive analysis as long as they can grasp these 2 points. But for the excellent predictive analysis, it requires us to immerse ourselves in the market for China supply to determine the logic of the possible consequence of the situation. That we call the analysis model. The risk in the glyphosate supply market is currently high, and our view now is to make decisions with caution. In terms of global demand, there is no clear sign of global demand explosion. Inventory in North America are gradually being digested, and demand for glyphosate purchase will gradually release starting in fall of 2023. However, considering the issue from North American channel as well as inventories at farmers' end, first thing of the North American channel has to consider is when purchase glyphosate products, whether the price can help to dilute the high-priced inventories from previous purchase. Even if North American inventory declines meet the expectations, the newly purchased glyphosate products must also be competitive in the marketplace. We must admit that biocrop science with the biggest capacity glyphosate can dominate the market price. According to Bayer annual report, it has already predicted that glyphosate prices would have an impact on the company's results in 2023. So it could be predictable that Bayer's sales price would not be a high segment. The era of super profit from glyphosate are over. Reasonable price range is what farmers expect, and the competition will make it happen. Currently, the price of glyphosate is increasing in China, and the only reason given on the supply side are the only accident at Dow Chemical plant and low operation rate from China's supply. Those accidents would be a black swan, but the impact of the incident should be assessed with great care. Chinese suppliers always want events that favor their price increases. Personal bias is likely to bring in misjudgment, selective ignoring the resilience of multinational supply chain would bring big fail for them. But how do we judge the impact of this incident on glyphosate prices? The behavior will help us to understand. The answer is simple. Instead of focusing on Chinese glyphosate prices, we should turn our attention to Bayer Crop Science glyphosate prices. If buyers don't make decisions on their final product price adjustment, then we can conclude that such an event could have limited impact on buyer, and margin of glyphosate would be not a problem for buyer profit. They can leverage it by loyalty program, digital services, and innovation of seed area. In June 2023, we saw a 77% decrease in U.S. imports of glyphosate compared to the same period last year, and there were big quantity of glyphosate cargo delivered by China suppliers to U.S. before the adjustment of China glyphosate. The cargo of glyphosate had already been ready to be delivered. The U.S. Fed interest rate hike continue. The U.S. monetary policy is affecting the global economy. Agriculture, the upstream of the food industry, has low fluctuation in environment of suppressed consumer demand. It has been difficult to have ag input sales growth with single-digit growth rate. The current release of glyphosate demand is mainly from South Hemisphere market. From my point of view, the high price inventory in South America market is still high. Distributors of high-priced stocks could be not diluted in time by purchasing low-priced glyphosate raw materials before June, which could be a negative factor for South American future consumption. But on the other hand, South American farmers' application expectation is very strong. If the drought situation improves this year, then South American consumption will gradually return to normal. Therefore, we conclude that the current price of glyphosate AI is a short-term shock to the upside. As each factory gradually release its production capacity under the upward price, China-made glyphosate is likely to see a turning down. Bayer Crop Science decisions on pricing of Roundup will be the key to determining the price trend of glyphosate in the second half of this year. To capture the market share as much as they can, Bayer would choose to provide a reasonable price to distributors to capture the market share in aggressively. Some Chinese suppliers and traders would also enjoy beneficiary from the so-called market price up. Seeing long but sell short would be tactic for every player in such period. However, play short is very dangerous for glyphosate. It has lower margin but bigger amount of cash flow. The fluctuation of price in uncertain buy and sell in timing will bring the high risk for everyone. The B2B glyphosate market is far away from value to farmers. That could lead no winner in the end. Anyway, that's all my comment. Thank you for your attention. This is David from SPM Insight. I will be in Agribusiness Global Trade Summit. See you in Miami.